Worth noting, of course, both the ECB and the Bank of England decided to keep their rates unchanged at 4% and 5.25% respectively. And as far as the ECB is concerned, looks like no rate cuts anytime soon, or do you think maybe not even at all in this cycle?
Well, Paul, I've got to say, in relation to Trichet's commentary the last last 4 weeks or so, he's actually done a 180 degrees against his previous month's commentary, where he intimated the possibility of some cuts, or at least a pause in their tightening bias. Now, I can empathise with his problem that he does have inflation at a 14-year high. But at the same time, there are growth issues, and there are also credit issues which also are in the European zone, which have yet to actually been priced into the euro. But having said that, there is a momentum run still going. Probably see another one or two figures on the upside there. Having said that, euro wasn't the best currency last night. It was a battle between sterling and yen. And I think, although it is obviously grabbing the headlines, I think that risk aversion is coming through, certainly in favour of the yen at the current time. And to a lesser extent, you're getting some short covering there in the sterling. So although the euro is going up against the US, it's not strictly speaking just about the euro in this case. Paul?
Okay. I mean, why the yen in that case then? It's surprising because if there's any weak major economy around the world, Japan's it, basically. I mean, the economy had great GDP figures last quarter, but they seem to be headed for a revision downwards. Exports are faltering, and the domestic economy is pretty moribund.
I agree. Certainly, it's the second worst story among the majors as such. But having said that, their external situation is far more robust. So, arguably, in keeping with, I guess, the Asian currency revaluation of the US unit, it's actually playing catch up with the yuan and a few of the other lesser currencies in the region. That said, it is more hesitant on the way down. Certainly, 100 is a more favoured target, and there is a risk that the yen will actually make the move and not necessarily be matched with the euro. So I do see some euro-yen weakness to come as well there, Paul.
Okay, now if you did want to bet on a strong economy, of course, it really has to be Australia. Not so strong in the domestic side, but doing great on the commodity side. New Zealand, Australian dollar, though, falling against the dollar, and the New Zealand dollar falling as well. See any recovery, at least in the Aussie, anytime soon?
I would say what we are due is for a real decent pullback. We've had a 10-cent rise in the Aussie the last 6 weeks. A very good move, considering the interest rate story tends to be only worth about 4 cents for every quarter basis point rise you actually get. I think the market well factored in that. And the actual, can we call it somewhat dovish commentary out of the central bank, both from the governor and the chief economist the last few days, suggests that they've done enough for now. Certainly the credit crunch here, to a lesser extent, ameliorates the need for further official rate rises. So I think, and in keeping with some of the more up-to-date partials we're getting in this quarter, in fact, the Aussie story for the next 1 or 2 quarters may in fact be less bullish than what we've had in the past. And the last last night's close at a 2-week low, same too for the Kiwi, suggests it is due for a pullback. And rather than talk bearishly, I suggest the possibility of paying too much for a good story that the Aussie and Kiwi currencies are. So I think a move back to 91 cents should be regarded as a minimum retracement against its very good gains the last 2 months or so there, Paul. And just keep in mind too, that the RBA is also talking about the expectation of some soft numbers going forward, and so the market tends to extrapolate forward, and I suspect we'll be looking for a business case to see that currency actually come back down from its current expensive levels. Paul?
Okay, what about targets for the yen? Do we see 100 to the dollar at any point?
That seems to be where it wants to go. Euro can go up to 155. But I do believe in terms of the current risk aversion we're still seeing in the marketplace, there's a business case to see the Aussie Kiwi down, yen up against everyone else as well, closely followed by sterling.
Okay, just give me 20 seconds on this. Going back to Jean-Claude Trichet, a few days ago he said he understands the US wants a strong dollar. Today he said he noted with extreme attention comments by President Bush that a strong dollar is in US interest, but noting and paying extreme attention is not the same as supporting. Bottom line, nobody can save the dollar right now?
No, at the moment we have a momentum run which should last a few more days there, Paul.
Okay. Peter, thank you very much for that. Peter Pontikis, Treasury Strategist at Suncorp Network.